Welcome to the market updates. The markets just went on a wild ride, and we're going to dig into what the source material suggests this all means. From the initial panic all the way to some surprising opportunities that popped up.
Last week was a total roller coaster, you know? It left a lot of investors feeling pretty dizzy and wondering what to do next. After a huge sell-off, the big question on everyone's mind is this: was that a signal to run for the hills? Or was it the perfect moment to spot a buying opportunity?
So, to figure that out, we first have to understand what sent the markets into a tailspin. And look, it wasn't just one single event, but more like a perfect storm of conflicting economic signals that created maximum confusion.
I mean, the week's economic news gave everyone whiplash. It kicked off with a dose of optimism. Strong U.S. growth data came out, suggesting the economy was humming along just fine. But then, boom. Midweek, the Fed chair threw some cold water on that, warning markets not to just assume rate cuts were a sure thing. And to cap it all off, a surprisingly weak jobs report landed on Friday with downward revisions that suddenly made those recession fears feel very, very real. This rapid shift from good news to bad news definitely sparked a major sell-off. But here's where the story gets really interesting. Right in the middle of all that chaos, a clear divide started to appear. While a lot of investors were rushing for the exits, another group was just getting started.
So, who was doing the buying? Well, according to the analysis, it was the big money. We're talking about hedge funds that had pretty much missed the big rally earlier in the year. For them, this dip wasn't a crisis. No way. It was the entry point they had been waiting for. They didn't panic. They acted.
And you can really see the impact of that buying pressure right here. The Dow Jones shows what's called a positive divergence. Now, that's a technical signal, but what it means is that even though the price hit a new low, the momentum behind it didn't, which often suggests a reversal could be coming. But even more powerful was the Nasdaq. It led the charge with a really strong recovery, signaling renewed confidence, especially in tech. So with stocks rebounding, what was happening with traditional safe havens like precious metals?
Okay, let's move over to precious metals, because the analysis here shows a very clear preference. You know, we often lump gold and silver together as safe havens, but right now, they're being viewed with completely different levels of enthusiasm.
For gold, the advice is basically caution. It's kind of bumping its head against previous highs, which is a key resistance level, so a pullback is a real possibility. The suggestion is a gradual, partial buying approach. Silver, though, is telling a totally different story. It's being called a strong buy, not only because of its own positive signals, but also because that really crucial gold-to-silver ratio is starting to turn in its favor. That suggests it's poised to outperform gold.
All right, now let's tackle the most volatile space of them all, crypto. Here, the analysis focuses less on trying to pick the exact bottom, good luck with that, and more on having a disciplined strategy for navigating those wild swings.
So, the crypto strategy being proposed isn't about timing the market perfectly. It's really about taking the emotion out of the equation through pure discipline. The plan is simple. You divide your investment capital into 4 equal parts, and then you just deploy one part each week. This method turns volatility into your friend because it means you automatically buy more when prices are low, like during last week's.
And which assets are on the watch list for this strategy? Well, the analysis points to the majors. Bitcoin is showing that same positive divergence signal we just saw in the stock market. Ethereum had a really strong, resilient bounce right off a key support level. And Ripple is also showing a clear upward turn after the sell-off. So all 3 are on the radar.
Okay, let's zoom out and just recap the big picture. After a week of some serious whiplash and worry, what are the key takeaways from this whole period of volatility?
The core message here is pretty clear. Volatility isn't just risk, it also creates opportunity. The market's sharp downturn, according to the source, opened up some valuable entry points. U.S. stocks showed impressive resilience, as large investors apparently came in and bought that dip. In precious metals, silver is being presented as the more compelling play over gold for the time being. And in crypto, a disciplined, gradual buying strategy can help turn those wild swings into a potential advantage.
And that leaves us with a final thought to chew on. The analysis we've explored here finds clear opportunities born directly from last week's chaos. So the real question for you is, where will you be looking next?
Thanks for joining our explainer. Your support is appreciated.